Last week, mortgage rates got down to just 6.34% for a single day, and of course, anytime we have a super exaggerated move in either direction like that, we expect it to retrace some, and we ended the week at 6.54%, which is still significantly lower than anything we've seen in the last year. But is it enough to actually get homebuyer demand to pick up? Remember, for me, real homebuyer demand is not going to enter the market until we get a sustained mortgage rate below 6%. So we had the lowest rates we've had in a year, but did anything happen? We'll see here in a minute. Inventory continued to grow steadily, still not as quickly as we need, but way better than last year. We should have already passed the peak of home prices for the year, and there should be less and less new listings hitting the market every single week from here on to the rest of the year. We're covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is August 12th. Let's see what the data is telling us. And if this is an old video, you can click here and it'll take you to the latest weekly market update. First up is market news. This week we are discussing the climbing inventory of home builders. A lot of people who are always saying a housing crash is coming every single week for years have recently been pointing to new construction inventory climbing as their latest proof of this housing crash that one day is going to come. But to be fair, they have been saying the housing crash is coming every week for over a decade. They'll tell you inventory is higher now than pre-pandemic levels, so that means prices will crash. There are just too many houses. Look at the chart. And in fact, yes, you can see pre-pandemic levels, we had about 80,000 new construction homes completed sitting on the market, and now we're a little over 100,000. But here is the reality. Home builders are incredibly efficient sellers. There is a 0% chance they're going to flood the market with their own supply and crash prices. The pace they build at is the pace of whatever they know they can sell at. And inventory is just one of many metrics. For example, let's look at the largest builder in the country, D.R. Horton. As of last quarter, their gross margins on home sales came in at 24%. That's after giving all these big incentives and discounts. They're expected to deliver more than 90,000 homes in 2024. They're making so much money that last quarter they announced they're going to buy back $4 billion worth of shares. Does this sound like a company that is distressed and worried about having too much supply and thinking home prices are about to crash? No, it does not. But maybe it's just because they're the number 1 home builder. So let's look at the number 3 home builder. That would be Pulte Group. Their earnings increased 19% last quarter. Revenues rose 10% with an 8% increase in closings and a 2% increase in average sales price. Their gross margin was even bigger at 29.9%. They also repurchased $314 million of common shares and another $300 million of senior notes. Again, they don't seem to be too worried about inventory growing. Lastly, let's look at the number 6 builder in the country. This would be KB Home. On average, their incentive package is much smaller than a lot of other builders at just 2% of their revenues. Whereas many of these other builders, like a D.R. Horton, you could easily see an incentive package of 6 to 8%. But even the number 6 builder in the country has a 21.9% gross margin. And if you look at their gross margin by quarter, they're doing better now at 21.9 than they were pre-pandemic. They were only at 17.9, 18, 19.5 in 2020. Of course, just like everyone else, they peaked in 2022 at 26.3%, and even now they're remaining at 21.9% gross margin. They are doing better than they were before the pandemic. And I want you to look at these top builders' average sales price in quarter 1 of 2020 compared to the most recent quarter, so you can just see what's happened since 2020. Toll Brothers' average price was $843, now it's $1,040,000. Taylor Morrison, $458, now it's $599. Pulte Group, $413, now it's $538. Even D.R. Horton, $300, now they're up to $375.5. And something that's interesting, LGI Homes, in 2020 their average was $247, and they just peaked their highest prices ever this very last quarter. So LGI just hit an all-time high. whereas a lot of these other companies were in 2022. But the point is, prices are up, profits are up, and now that mortgage rates are finally dropping, they now get to spend less and less on these incentives, which will drive profits even higher. For example, if it used to cost them $30,000 to buy the rate down to 4.5%, now it may only cost them $20,000. So they just made an extra $10K out of the air just because rates are dropping. But the point is, they have so much margin to offer even bigger incentives if they had to, if they really were distressed and needing to start moving these homes. I promise you, these builders have not overlooked inventory. We're not catching them at something that they've missed. The inventory they have is what they know they can sell. So how in the world are these builders doing so well? First of all, the housing market has been undersupplied for well over 15 years and never really caught up to the underbuilding that occurred during and following the great financial crisis. So even pandemic aside, we already were not building enough houses. Second, we have a housing supply shortage of existing homes. Even in markets like Dallas, where inventory has recovered, there's actually still very little good inventory that people actually want to buy. And a big part of that is a lot of people feel locked into their current home because mortgage rates are too high. They bought their last home at a 2.75. There's no way they could even afford the same home with rates up over 6.5%. So until rates come down significantly, people are going to feel locked into their good homes. They're not going to sell them. This obviously benefits the home builders. And even if a home buyer were to find a home that they liked, it's going to be at a very high mortgage rate compared to these builders because there's no incentives, which in many cases is easily $400 to $500 higher of a mortgage payment. Which brings us to third, affordability. These builders out in the suburbs are offering a nicer house, brand new with warranties, at a lower price, with a several percent lower mortgage rate, and they're paying all your closing costs. And all you have to be willing to do is commute 20 to 30 more minutes, which a lot of people, it turns out, are willing to do. And this is going to continue until rates get low enough for people to first feel like they can sell their existing home and for buyers to be able to afford these pre-existing homes again. So for everyone thinking these builders are going to go under and crash the housing market or whatever it is, I don't know what else to tell you. But let's move on. Okay, starting with national housing inventory. This week we had an increase of 9,024 homes for sale in the country. That's a bit more than we've been having the last few weeks, and that gets us up to 41% more inventory than we had last year. So this gets us to 692,752 homes available for sale in the country. A fun fact is, the same week last year, inventory was only at 492,000, so much better this year. Also, I want to point out that if you look at 2022 and 2023, inventory continued climbing until October or November. So hopefully that trend happens again this year and we'll keep climbing all the way up around here. Maybe we get up to 800,000 homes, who knows? And as always, for reference, the all-time inventory bottom of 2022, we only had 240,000 homes for sale. At the peak of last year, we had 570,000 homes for sale. This same week in 2015, we had about 1.195 million homes for sale. So we're up double from the 2022 bottom and still need to nearly double again to get back to a normal market. But we're getting closer every week now, which is great. And now, normally I would be covering new listings as well as pending sales, but the data source I pull from has not updated either of those yet by the time of me making this video. So sadly, we're skipping those next week, but I can tell you right now, they're just continuing their trend. There's not going to be any surprises there. So we'll see that next week. One thing that was unusual about this week was the percentage of properties having a price decrease. Every year it's normal for a third of homes to take a price cut before selling. And looking at the national chart, this week we are down to 38.48% of homes. We had a drop from last week of 39.43. So first time in a long time that we actually had a drop in the number of homes having a price decrease. Last year we got as high as 39.2. The year before, we got as high as 43.2, and somehow this week we had a decent little drop. But also just know it's normal for this number to keep increasing until somewhere in November. You can see here it was about November 10th, here it was November 11th. So maybe this year it's going to be the same. Okay, moving on to mortgage rates. So you can see we had this crazy fast drop down. We retraced some of it, bounced back up. So that was on August 5th, we got down to 6.34. That was the bottom of the week. We got up as high as 6.63. We ended Friday at a 6.54. And today we actually went up a tiny bit to 6.55. So this is Monday's print. Then looking at mortgage purchase applications. So rates dropped last week. And what the result was just this tiny 1% week over week increase. Just a little barely even moved. You would call that not even a move. And again, that's with rates dropping all the way down to 6.34, way below anything they've been for the last year, which is why I've been saying for a long time that there is no reason to believe mortgage demand is going to grow significantly with rates this high. Even though they're lower than the last year, we have evidence from the previous years that where the real home buyer demand is going to be below 6%, which is why you still see a ton of new construction offering anywhere between 4.5% to 5.99% rates, and they're the ones that are still selling. I'm a little surprised that it was only 1%, but it really just lines up with what I've been saying the whole time. Okay, before we move on to the local market data, a couple of things. One, if you're considering buying a new construction investment property here in the DFW market, I made a video last week, and this is updated from the one I had made previously, showing my top 5 markets and what you can expect to get there. So if you're an investor, watch this one next. Number 2, if you want to make sure you don't go broke buying a house, I've made a home finance course. Check that out. And number 3, if you are still a ways out and you just want to get fully educated on how and what it takes to buy a house, I've made courses for both pre-owned homes as well as new construction, as they are both very different experiences, and the links to all of those are down in the description below. Okay, now let's move on to the local markets. We're going to be starting with the MLS data in Dallas County, and before I show you this, I need to remind you this data is going to be very skewed this week because it corresponds with the 4th of July week. This was a short week, and just remember, around holidays, the data is always going to be very skewed. But let's jump in. Dallas County MLS data. We had 592 listings this week. That's 5 more than last week. Only 256 closings. That's 104 less than last week. Again, that one is skewed because of the holiday. 56 of the homes that closed were immediate sales, meaning they contracted within the first week. 27 less than last week. 300 went under contract. That's 16 less than last week. And in total, there are 2,179 homes either under contract or in pending status. That's 7 less than last week. Now moving on to Collin County, we had 405 new listings. That's 30 less than last week. 219 closings. That's 109 less than last week. Again, that's the holiday. Of the homes that closed, 39 were immediate sales. That's 44 less than last week. 190 homes went under contract. That's 14 less than last week. And in total, there are 1,822 homes either under contract or pending. That's 34 more than last week. Okay, moving on to the Market Action Index. If you're not familiar, it takes all of this data into account, puts it into one easy to read graphic with a number. We are at a 40, which is a slight seller's advantage. Anything a 30 or below is a buyer's market. Above a 30, we're asking how much of a seller's market are we in? Still a seller's market, slight seller's advantage here, and we are at exactly the same median list price as last week, except the median price of new listings saw a jump back up to just about where we were, 5,000 less than we were 2 weeks ago. Average days on market had a drop of 3 days, and median days on market from 49 down to 42, so that's interesting. But again, that's 1 week data. We're looking for trends. The trend, you can see, has still been up. And then here's an interesting one. The number of homes relisted. 8% of homes that had come off were relisted. And this is obvious. I know this because I had a lot of friends calling me saying, should we list now because rates dropped? You don't need to hurry and list. As we saw from the number of people applying for mortgages, it was a very small increase. It's not like things are going to shift dramatically overnight. But I see a lot of other agents got that same call, do we need to list right now? And 8% of people relisted their homes, that's a high number. So to me, it's very obvious that's because rates dropped. People thought that's going to bring a wave of people. Let's list now. Not the case. And then inventory is still climbing ever so slowly, but that's good news. And the Market Action Index actually got a tiny bit hotter than last week. So definitely a different week than we've been seeing. Everything has been trending down. Today, we kind of turned the other way for at least 1 week. So we'll see if that continues. Now looking at Collin County, their median list price as well remained exactly where it was last week. And they also had a jump in the median price of new listings. They actually came up higher than they were even the previous weeks. Their average days on market as well came down only 1 day though. Their median did remain the same. Number of homes having price decrease has just been right around here for a while. Their homes relisted did not see a jump really. Inventory, yes, another small increase. And their Market Action Index as well, instead of going down, had a very small tick up. So that's interesting. We'll see what happens next. Now we're moving on. First the pending sales and then the top 10 charts. So looking at 2024 pending in Dallas County, we had a decrease this week, still well above where we were in 2023 though. and have been pretty consistently around where we were in 2022. And then looking at Collin County has actually had another slight climb this week from 1621 up to 1637. And of course, Collin County, number 2 fastest growing county in the country. So obviously the last couple of years, we should see more and more pending sales because it's been growing so fast. But yeah, their pending sales are climbing, which is unusual for this time of the year. Now we're moving on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that same market action index number. Remember, a 30 or below is a buyer's market. Starting with the absolute hottest city, Carrollton remains in the number 1 spot at a 54.47. Ferris heats up 1 to number 2. Louisville cools off 1. Lancaster, Duncanville, and Plano all remained. Grapevine heats up 2. Richardson remains. Garland cools off 2. And Balch Springs jumps onto the list, replacing Coppell. So Coppell cooled off the list. Balch Springs jumps on. Now zooming into specific zip codes, the absolute hottest was Carrollton, 75007, followed by Carrollton 75010, Dallas 75236, Dallas 75244, Louisville 75067, Plano 75093, Dallas 75249, Grand Prairie 75050, Ferris 75125, and Plano 75023. So those are the hottest zip codes. If you have a house there, congratulations, you can sell for top dollar. Now moving on to the coolest cities and zip codes. The absolute coolest city is Leonard, which actually cooled off 2 spots this week. We have 3 buyers markets. Remember, that's below a 30. So Leonard is the absolute coolest, and then Sunnyvale heats up 1. It was the coolest last week. Van Alstyne also heats up 1. Prosper remains at number 4, hanging on by a thread to not go back to a buyer's market, which it was a couple weeks ago. Then Lavon cooled off 1. Rockwall heats up 1. Anna cools off 2. Blue Ridge heats up 1. Salina heats up 1. And Nevada jumps on as the hottest city on the coolest cities list, knocking off Whitewright. Now looking at the coolest zip codes, the absolute coolest, Leonard 75452, Sunnyvale 75182, Van Alstyne 75495, Prosper 75078, Dallas 75204, Mesquite 75181, Lavon 75166, Rockwall 75032, Dallas 75205, and Anna 75409. Remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.